Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
April 14th, 2026. Stocks are jumping as the PPI inflation surprises. Cooler than expected wholesale inflation. There's a whole bunch of bank earnings. Thursday, we get Netflix after the market. Ship testing Hormuz blockade appears to transit and then U-turn. Interesting. Some other headlines out there is Oracle stock pops on a Bloom deal to power AI data centers. Fed's Goolsbee says rate cuts may need to wait until 2027. Well, some people say not so fast. Maybe we cut rates this year on the Federal Reserve. The IMF is warning that the Middle East war is driving up financial stability risks around the world. Scott Bessent was the guy who's not on the Fed, but he's the one who says he's confident that core inflation is going down and Fed will need to cut rates. Bitcoin jumps to 74,000. Oh, look at that, almost 75,000. Let's hit the numbers. S&P 500's up 84 basis points. That sits at 69.44. The Dow Jones Industrial Average is up 64 basis points, sitting at 48,524. The Nasdaq's up 1.4%, sitting at 23,516. The Russell 2000 is up 1.2%, sitting at 2703. Good day across the board. The volatility index is under 20, which means it's not nothing, but it's certainly not frantic out there. Bitcoin is, from my perspective, the exponentially larger move up with the markets at this point in time. 75,000 and 90,000 are the next two key levels for it to get through. 10-year Treasury sits at 4.27%. There's a lot of news today. I do want to get straight to it. And when I say a lot of news, I'm also implying a lot of research, a lot of opinions. I'm not just reading you the news. Mega cap and tech leadership are outweighing mixed strength in the broader markets. Crude oil moves below $95 a barrel. Cooler than expected March PPI report. Communication services sector is up 2.7%. Meta's up another 4%. Alphabet's up 3%. Mega caps are reasserting their leadership again today, which supports growth in the consumer discretionary, up 2.3%. And information technology up 0.9%. JP Morgan's down slightly, but they're extending the banking sector's bullish momentum following its first quarter 2026 report, delivering better than expected earnings per share and revenue as resilient client activity and stable credit trends support results. While overall performance is strong, the company modestly lowered its 2026 net interest income outlook to approximately $103 billion from prior guidance of $104.5 billion, signaling a slightly more cautious forward rate and deposit backdrop. Citigroup's up 2%. They topped earnings analyst expectations. Notably expects to see net interest income, excluding markets, up 5 to 6% for 2026. The net interest is turning into Goldman Sachs, JP Morgan's, and Citigroup's biggest reporting line this season. Wells Fargo down 5% after beating earnings per share expectations but missing on revenue. The company reaffirmed its 2026 net interest income outlook. We are off and running today. By the way, thanks for being a part of the show. Spoke with my boss yesterday, and I'm just so appreciative of everything in my life, including the fact that I get to do this for a living. Brent crude's up 51% for the year. Silver's up 7%. Gold up 10%. Bitcoin down 17%. The Morgan Stanley Country Index All World up 2.75%. The Magnificent Seven is down 5%. Russell 2000's up 6%. Nasdaq down fractions. S&P 500 up 0.5%. And the Dow Jones Industrial Average down 0.33%. Yesterday, the S&P 500 officially erased every loss since the outbreak of the Iran conflict, which is just telling you, I don't know how you spell resilient. RESILIENT. Find out what that means to me. pretty resilient. The markets had a 7.4% drawdown that bottomed on March 27th, and we're now kicking off a rally that essentially started when the United States and Iran announced tentative peace talks. The conflict is not over, even if the market is saying that it is. President Trump and Iran's leadership still have a lot to figure out, and neither one of them appear easily agreeable when it comes to terms. Oil prices still remain elevated, well above pre-conflict levels. Supply disruptions stemming from the Strait of Hormuz uncertainly will work their way through not only energy prices, but fertilizer, commodities, chemicals, and plastics. Oil is 26% higher than the pre-Iran conflict. This is something we're going to be dealing with for several months. And we're really looking at the front month of May 26 oil contract and the June contract. The May contract falls just before the end of the 2-week truce. The June contract right before Memorial Day. These two contracts will be pricing in something slightly different as far as whether the negotiations start back up and are fruitful before the end of the truce or aren't as fruitful, and if the conflict heats back up. If we don't get this resolved by Memorial Day, there's going to be big problems in the world. Yesterday, BlackRock raised its view on U.S. stocks on belief that the war is over. I'm repeating this piece of news. They manage $14 trillion for clients, so it's not immaterial. Developments during the war made BlackRock cautious on domestic stocks, but it said prospects for a lasting ceasefire now have strategists believing that the impacts won't be major. I believe in BlackRock research. Their strategist said the threshold for the U.S. and Iran to go back to war is high, further limiting potential damage. Prospects for corporate profits appear bright. S&P 500 companies are expected to post a collective 12.6% profit increase in the first quarter. BlackRock said that has put valuation of information technology against the other 10 S&P 500 sectors at its lowest since mid-2020. They re-up risk in the United States and emerging markets due to strong corporate earnings. When they say re-up, that means they're exposing clients to more volatile assets like the United States stock market and emerging markets. They say that they're focusing on profit margins this quarter and still favor thematic opportunities like defense. The Nasdaq's been up for 9 straight sessions in a row. That's the longest winning streak since December of 2023. Johnson & Johnson delivered a solid start to 2026 with broad-based growth across innovative medicine and med tech, reinforcing the strength of its diversified portfolio and its pipeline. The innovative medicine segment remains the primary growth engine, driven by oncology leadership and a rapidly expanding immunology franchise. MedTech is benefiting from disciplined execution and innovation in high-growth cardiovascular and surgical markets. The relatively muted stock reaction reflects a good but expected quarter, as upside was modest and partially offset by continued Stelara erosion and margin pressure tied towards elevated investments. Management struck a cautious tone on their outlook, highlighting accelerating growth through the year, a robust pipeline of catalysts, and a clear path to surpassing $100 billion in revenue. While near-term growth margins, headwinds, and competitive dynamics remain factors to watch, the company's innovation-driven strategy and strong launch cadence position it well for sustained mid to long-term growth. Amazon struck a deal to buy Globalstar as it looks to take on SpaceX's Starlink. They announced that they've agreed to acquire the satellite company for about $11.6 billion. The deal would effectively bring Globalstar's existing satellite operations, infrastructure, and assets, including the MSS spectrum licenses, with global authorizations under Amazon to deliver continuously connectivity for consumer, enterprise, and government customers around the world. SpaceX's Starlink won't be the only game in town. Second biggest acquisition ever for Amazon. Amazon's LEO satellite network will add direct-to-device services to its low Earth orbit satellite network and extend cellular coverage to customers beyond the reach of terrestrial networks. Amazon is aiming to increase the number of satellites it has in Earth's low orbit to 3,200 by 2029, While the 24 satellites it would take on from Globalstar deal would push it slightly further towards this goal, Amazon is facing with a regulatory requirement to meet half of that 3,200 figure by July of this year. The company operates a current network of about more than 200, so they got a long way to go. Amazon did sign an additional agreement with Apple for Amazon Leo to power satellite services features for some current and future iPhone and Apple Watch models. This is a crazy day of news. Amazon buying Globalstar, a lot of earnings. Listen to this turn. American Airlines is trading up 5% today, closer to 8% right now. United Airlines CEO Scott Kirby has floated the idea of a possible merger with American Airlines. Kirby raised the idea during a February White House meeting with President Trump, though it remains unclear whether United has made any formal approach to American or whether any deal process is underway. This would create a true airline giant, combining the world's largest and fourth largest airlines by capacity, which together control more than a third of the U.S. market. I'm not sure the Department of Justice would approve this deal in any other world other than the Trump administration. Transportation Secretary Sean Duffy said last week that there may be room for mergers in aviation, but warned that any large deal would face close review for its impact on consumers and might require the airlines to divest assets to avoid excessive market share concentration. Interesting to note that this is all happening while jet fuel prices are skyrocketing. Americans under significant financial pressure, weighed down by heavy debt and weaker profitability relative to their peers. Blue Owl raised $400 million in the bond market at 6.5%. This so-called business development company, it's a big victory for them. It could help with redemptions. Goldman didn't have trouble with its internal business development company yesterday. Is that crisis, private credit, over? I'm not stressed. Getting older. There's a company called Janus Living. RBC's Michael Carroll said, we are initiating coverage of Janus Living with an outperform rating and a $27 price target. It's currently around $24, $25. We believe the company has a best organic growth profiles, in part driven by the portfolio being 100% shop versus pure play shop REIT peers only at 72%. The company's got excess liquidity. They see high teens earnings growth over the next 3 years. It's a senior housing real estate investment trust. Janus Living is a real estate investment trust. When you look at a stock like this, you got to do a lot of research because it's a mix on senior living, aging demographics. I live in a home that I do not want to live in 10 years. I'm getting older. I don't need this much home. My kids are going to be leaving for college soon. I want a senior living community that's close to hospitals and doctors. Part of it. Before I get there, also, I want maybe an apartment in France, maybe an apartment in Spain, maybe an apartment in Australia. If I could do beach, I'd like to do beach versus cold, warm versus cold for sure. But mark my words, I am not afraid of the idea of investing in things other than tech, like senior housing. I obviously consult a broker advisor for tech action in any stocks ever mentioned. Yesterday, I talked a little bit about buying Williams-Sonoma for growth, a little bit of growth and a little bit of income for retirement. I did put a large amount of money, my cash, in. I converted some money market cash, some money market accounts into cash as the Iran war was starting. I've made my best investments when companies fall 20 to 40%. With that said, last week on the big deadline, I thought Trump was going to chicken out. The markets thought Trump was going to chicken out. So most of us bought before the deadline, right when the fear was highest. Now, again, it can all go back down almost immediately. If it did, I think it would test a double bottom before blowing through and going down to a 20% correction. Would that double bottom test hold is the question. Citi raised its price target on Starbucks to $99 from $92. Analysts said that store closures and marketing initiatives should push same-store sales above expectations. Guggenheim sees mixed engagement in Netflix, but solid fundamentals, reiterating a buy ahead of earnings tomorrow night after the market closes. Currently $105 stock. You could have got this for $88 right during the biggest, messiest, dirtiest part of the Warner Brothers Discovery acquisition, or not acquisition, as it turned out, not. You don't get great opportunities to buy great companies all that often. I have a list of stocks that I would buy if they fell 10 to 20 to 30% for sure. January 2026, Netflix was at 8.8% of total TV viewing share. That represents a 3.2% year-over-year decline in viewership, the first since June 2025. That's not good news. It's probably good news for Alphabet's Google and Google's YouTube. There's too many companies in Alphabet. There's a lot of sponsorships and partnerships that are going on right now. Smaller strategic acquisitions at Netflix, expanded sports rights, trying to replicate the TF1 partnership model globally, aggressive capital return. That's right, they're going to be buying back shares or maybe even doing a dividend play. Oracle is gaining today, and I'm telling you, there is just a lot of headlines and research today. Oracle's rallying after Bloom Energy expanded its partnership with the company, agreeing to supply up to 2.8 gigawatts of fuel cell systems to support Oracle's rapidly growing AI and cloud infrastructure needs. The deal is underscoring Oracle's aggressive push to scale power capacity for data centers, a critical bottleneck in AI development and deployment. It positions the company to better compete with hyperscalers by ensuring reliable on-site energy solutions. Oracle's up $6 today on that news. I still have a lot of news on Apple, Microsoft, Tesla, and more coming up. I do have a Pints and Portfolios Saturday, April 18th, 11:30 to 1:30 in Sunnyvale, California. It's a good event that I'll buy the beer. It's at a brewery. And if you're 50 plus heading towards retirement, this is a great event for you. And if you've been listening to me for 10, 20, 30 years, it's a good chance to, connect. I'll bring 2 CFPs with me. They'll help review your situation. After the event, I'll give you a preliminary plan, which includes a Monte Carlo scenario to show you how much money you're going to have at age 80. In a good case scenario, a worst case scenario, and a fantastic case scenario. It runs over 10,000 simulations based on input from data that you give us. All of it will be discreetly handled with digital uploads or in-person delivery of documents. You can sign up for the event at robblackshow.com. That's this Saturday, April 18th, 11:30 to probably around 2. Sign up at robblackshow.com. More coming up just after this break.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
I'm back. Thanks for sticking through the commercial. I try not to gum it up too much. Let's take a look at how the markets are doing. Ooh-wee, they're moving higher. The S&P 500's up 1%, 1.07%, creeping higher. The Dow Jones Industrial Average up 61 basis points, up 292 to 48,511. The Nasdaq's up 1.7%, so tech is really leading the way. Russell 2000's up 1.4%, sitting at 2708. Bitcoin 5,315, so it has gotten across that 75,000 line. Before we get back into the tech stock heavy analysis that I have for the day, I wanted to throw down. Slate Auto is making an ultra cheap, bare bones, but customizable electric pickup truck starting at $25,000 with funding from Jeff Bezos. It's only going to have 150 miles of range. Maybe you can buy an upgrade. No power windows, no main infotainment screen, and not even any paint. There's a planned launch event on April 24th, 160,000 plus reservations that are refundable and only $50 down. They're going to start rolling out late 2026. Meta is going to surpass Google this year in ad revenue. In a world supported by digital ad dollars, Meta may soon be king. The Instagram owner's net digital ad revenues are expected to hit $243.5 billion, surpassing Google's projected $239.5 billion this year. A record 22.9% of financed new car purchases involved loans of at least 84 months or 7 years. People are buying, 1 in 4 people, essentially 23% of people buying new cars that are financing them are opting for the 7-year loan. A decade ago, that was about 10%. Now it's almost 25%. The average amount financed is $43,899. Average sticker price is $51,456. 41% of all new vehicle purchases involve negative equity, where someone's turning in a car or rolling their debt into new debt. Right now, the typical good credit score will get you a 6.9% mortgage. Mortgage auto loan. $43,899. Remember, that's the average amount financed. For 7 years at 6.9%. Equals a monthly payment of $660, and it's going to cost you $11,575 in interest over the life of that loan. Piper Sandler reiterated Microsoft's buy, but lowered their price target to $500 from $600. Weakness in enterprise software throughout 2026. Mizuho took Microsoft to $515 from $620. Microsoft has fallen from grace. Shares are down 20% year to date. Bank of America raised their Apple price target to $325 from $320. Analyst Wamsi Mohan highlighted, as we head into 2026, the second quarter, earnings after market close on April 30th, we see upside to street estimates, given continued strong sales of iPhone, double-digit growth in services revenue, and benefits from foreign exchange. Upcoming catalysts include expected new buyback authorization, worldwide developer conference in June, and a launch of a foldable iPhone in the fall, and launch of an enhanced Siri with integration with Gemini AI, which can drive higher upgrades. He sees iPhone demand remaining strong and raises his iPhone units for the March quarter to 60 million. Wamsi is modeling service revenue growth of 14% year over year, consistent with growth seen in the December quarter and management's guidance. Even though global app store sales remain relatively weak, 7% year over year in the March quarter. Gross margins of 48.2% versus guidance of 48 to 49%. We see sequentially lower margins in the third quarter on mix of higher component costs. Expect Apple to guide third quarter revenue growth of 10 to 15% year over year and gross margin range of 47 to 48%. Reiterating a buy $325 price target. This is an interesting one. Citi is adding an upside 90-day catalyst watch on Alphabet into earnings. Price target has been raised to $405 from $390. 90-day catalyst. That's woo-wee. Is that a play on options? Kinda, right? That's how I look at that. Evercore ISI calls SanDisk an outperform. It's currently a $900 stock. Evercore is calling it a $1,200 stock, even though shares are up nearly 2,900% over the past 12 months. In a note initiating coverage on the top performing S&P 500 constituent, given it an outperform rating and an above consensus price target of $1,200, Evercore said, "We believe SanDisk is levered to one of the most attractive areas of the AI infrastructure stack, data storage, where demand is accelerating and supply remains constrained at minimum through 2028, if not beyond. While concerns around peak pricing and cyclicality persist, we think the current cycle is structurally tighter and more durable, underpinned by AI-driven demand and sustained supply discipline that is creating SCAs." What is an SCA? Strategic Contractual Agreement. providing memory providers with pricing floors and upfront cash payments. SanDisk has been the subject recently of a fair bit of positive commentary in recent days. Citi and Bernstein boosted their price targets for the shares ahead of earnings that they're going to report on April 30th. Hard disk drive maker Western Digital has more than doubled since the start of the year. Seagate is about up 90%. DRAM maker Micron. DRAM is the basis for the AI-focused memory product called High Bandwidth Memory, or HBM. It's up more than 50% in the first 3.5 months of the year. Vertiv is in the news. Their dominance in the data center cooling earns it an outperform. They're up 3% today, adding to its nearly 90% 2026 gain. BNP Paribas. The analysts initiated coverage on the stock with an outperform, essentially a buy and a $345 price target, about a 15% premium to the market. With 80% of sales tied to data centers, Vertiv is a leader in cooling solutions, notably for high-density AI computing. BNP Paribas believes Vertiv's growth is sustainable given its content is structurally rising as higher density AI clusters drive a steep change in cooling requirements. NVIDIA backed Lumentum, ticker symbol LITE, sees AI filling orders through 2028. Optical components and the demand for them is accelerating, on track to fill its order books through 2028. Other optical companies include Ciena, ticker symbol CIEN, Corning, ticker symbol GLW. Lucid is climbing today after announcements of new CEO and expanded robotaxi partnership with Uber. Shares are actually down now, but they climbed earlier. Company announced it has found a permanent CEO in Silvio Napoli. He was formerly CEO of the Schindler Group, one of the world's biggest manufacturers of elevators and escalators. Lucid had been run by interim CEO Mark Winterhoff for more than a year, who's now going to step aside and go back into the role of Chief Operating Officer. They announced that they've expanded their partnership with Uber for robotaxis from 20,000 to 35,000 vehicles. Uber will increase its investment in Lucid by $200 million, bringing the total to $500 million. Saudi Arabia's sovereign wealth fund also committed a new investment of $550 million into the company. I can't play into that one. Lucid's just too much for me. Right now, Wall Street's got three main battlegrounds through one war: the software stock rout and earnings season. We're moving into earnings season, and I'm excited by that. SpaceX satellite internet business is propping up its rocket and AI businesses ahead of SpaceX's highly anticipated IPO in June. In 2025, Starlink generated $11.4 billion in revenue and $7.2 billion in adjusted EBITDA, with a striking 63% margin, making it SpaceX's only meaningful source of profit. By contrast, the company's core rocket launch business and its recently acquired AI unit XAI lagged far behind financially. The space launch business generated $4.1 billion in revenue and about $700 million in adjusted earnings before interest, tax, depreciation, and amortization, EBITDA. The AI segment brought in $3.2 billion in revenue, but lost roughly $1.2 billion. Starlink accounted for most of SpaceX's revenue and more than all of its adjusted profit. Starlink's profitability is already attracting rivals like Amazon, who agreed today to acquire satellite company Globalstar. CarMax didn't have the best quarter. Used car retailer CarMax reported its fourth quarter earnings before the bell. Shares are down 10% roughly. Sales of $5.9 billion were above expectations of $5.7 billion. Retail gross profit per unit of $2,115 was slightly below estimates and down $207 from the year prior. CarMax has seen elevated interest in electric vehicles and hybrids in recent weeks as gas prices continue to climb amidst the war in Iran. They have an activist investor, Starboard, taking a $350 million stake in CarMax, urging the company to cut costs and adopt more dynamic pricing. Robinhood is jumping today as crypto and retail favorites rip higher. I like Robinhood for the long-term patient investor because my kids are going to use it more so than Charles Schwab or Fidelity. Strong gains for the crypto asset, which doesn't really have fundamentals. The outfit that's been synonymous with retail activity, and the stocks retail traders like the most are the key signals that the risk appetite is returning. Quantum stocks are ripping higher. Today it's World Quantum Day. Who knew? Shares of IonQ up 15%. Its quantum computing peers are surging with them. D-Wave is up 12%. Rigetti Computing is up 9%. Quantum Computing is up 9.8%. IonQ disclosed new contracts and a new set of benchmarks. Investors poured back into the retail traders' favorite stocks. IonQ CEO Niccolo De Masi was on CNBC this morning and said the company made 4 recent announcements that are boosting the stock. Benchmark results, a DARPA contract, an increase of partnership with Air Force Research Lab, and an increase in partnership with the University of Maryland. All meaningful contract wins. Let's wrap up this segment here and mention that I have an event coming up this Saturday. Last chance to sign up. Pints and Portfolio, 11:30 to 2, essentially in Sunnyvale, California. It's informal. I had a college professor that wanted us to do more work on Shakespeare on Saturday, so he'd bring the donuts and the coffee, and he would talk Shakespeare informally. No tests, no quizzes, no pop-ups. Just his love of Shakespeare. I always held that thought in my mind, and this is what I'm doing, a Pints and Portfolio. I love talk financial planning. I love talking to you. I've got to know you, and you've got to know me through the years. I've done a radio show that's very honest about my failures and my successes. I had a marriage that lasted under a year. We can talk TV, we can talk radio, we can talk financial planning, we can talk your situation. That's what I want to do. Are you on track to retire? I'm going to bring 2 CFPs with me. One of them is going to be my CFP, Julie Chan O'Rourke. You can meet with her or Ryan at the event. Go to an exclusive corner if you want. Bring questions. Bring statements. After the event, you can upload statements, PDFs from your computer securely through a digital link. We'll give you a portfolio analysis. We'll also give you a preliminary plan and a Monte Carlo scenario that'll tell you how much you are expected to have with all this inflation going on and deflation and interest rates. It's a pretty cool scenario. I don't want to say I get off on it, but it's pretty awesome. You can sign up for the event at robblackshow.com. That's robblackshow.com.
What's the best way to choose a financial advisor? Download our guide at robblack.com. That's robblack.com. Powered by EP Wealth.
I'm not sure this qualifies as a civil war, but Wall Street has a bit of a war going on. Stocks have to figure out the Iran war. Stock market has to figure out the software stock route. And the stock market has now got to figure out earnings season. A lot going on. NVIDIA and Broadcom stocks are reigniting. They could spark a new phase of the semiconductor rally. I picked up some shares of Broadcom last week on the Trump always chickens out threat. Timed it beautifully so far. But again, my goal isn't short term, it's long term. Broadcom now trades at 10% below its most recent 52-week high. Semiconductor stocks have rallied broadly, with attention now shifting to mega cap leaders, NVIDIA and Broadcom, to fuel further gains. NVIDIA's stock is up 70% over the last year, but up only 2% in the last 3 months. It's got potential for about 35% upside to $250 by late 2026. Broadcom I see up 25% by the end of the year to $475. These are the leaders. Now, if you don't want to do the leaders and you want it to play the sector, the Van Eck Semiconductor sector, ticker symbol SMH. It's an exchange traded fund. 9-day winning streak today on the NASDAQ. It's above its $402.60 double bottom pivot taken out on April 6th. That's what I was seeing last week, is a double bottom, and fingers crossed that Trump always chickened out. I'm not a guy who times the market often. And again, I could eat poop on this one. I could eat crow. I could eat like just horrible stuff. Yeah. But it's always French. French poo-poo. Awesome. There's a company called AER Test Systems. It's AEHR. They're up 36% over the last 2 weeks. I'm sorry, 59% over the last 2 weeks. Big winner. Cirrus Logic is now pushing away from a long 20-month cup with handle pivot of 146. Intel and Marvel are an astounding up 40 and 50% year to date. Semiconductors are rocking and rolling. Now we need our king and our queen. And I don't know sure which one is which. And I'm not going to look. But NVIDIA and Broadcom, between them, one's going to be king, one's going to be queen. We need our king and our queen refreshed and ready to rise. NVIDIA is the only $4 trillion stock on the planet. It's up 70% over the last year. It's had some amazing growth. And when I say that, I don't say it lightly. NVIDIA is got a PE of 21 times, sales growth of 29% for expectations on this year and 29% for next year. I'm sorry, I got that one wrong. NVIDIA's got 21 times earnings. I got that right. 71% sales growth in 2026, 32% sales growth in 2027. And it's got a PE lower than the market average. Broadcom has got a PE right at market, 25 times earnings, but sales growth of 74% this year and 44% next year. So there's some value going on Wall Street. I'm not a big value guy. I'm not against it. Broadcom, a chip company involved in AI, now trades 10% below its most recent 52-week high. Last week, the stock screamed higher by more than 18%, its best weekly return in 5 months. But there's been some underperformance the last 36 months. Morgan Stanley put on the lipstick and gave a big fat kiss to Spotify today. That looks like a trade. I looked at it on a free cash flow level and I looked at it on an earnings level. Love it on the free cash flow. Hate it on the earnings. They forecast a 35% earnings before interest tax, compounded annual growth rate of 20% free cash flow through 2028. Bullish view from Morgan Stanley rests on confidence in Spotify's ability to deliver low mid-teens, excluding foreign exchange revenue, growth via product innovation, share gains. They've got 300 million paying users and 800 million monthly active users. Those are big numbers. The problem is they're in a low margin business. Pushing Taylor Swift's music onto you doesn't pay them a lot of money. Now, again, they're getting into advertising, which helps. Can they produce an above average 35% earnings before interest tax compound annual growth rate through 2028? Meta and Google in the news. In a world supported by digital ad dollars, Meta may soon be king. The Instagram owner's net digital ad revenues are expected to hit $243.5 billion in 2026, whereas Google is projected to hit $239 billion. So that's $239 billion for Google, $243 billion for Meta. Long live the king. So big tech companies, including Meta and Google, are increasing their spending on AI in hopes that they will grow their top and bottom line revenues. We're seeing evidence of that. Meta CFO Susan Lee credited AI with driving performance gains and said the growth will continue, saying, quote, "We expect the set of investments we're making in 2026 will enable us to drive further gains as we continue to integrate AI across all layers of the marketing and customer agreement funnel." In surpassing Google, Meta has essentially had many of its core strategies validated. Scale, network effects, habits are more important than anything else in digital media. It's carefully built and defended advantages it has in all three of those arenas. Intel is up for its 9th straight session win today. It got it. That's a good streak. The romp to the top has made it the top performer of the S&P 500 this month, gaining 46%. The turnaround seems to be turning. Intel is now up 230% over the past year. You have to go back to 1987 to find a better 12-month run for the stock. That's kind of right when I started getting interested in stocks. Maybe it was Intel that got me into it. I doubt it, but maybe. The forward-looking market is giving Intel credit for a turnaround that really hasn't happened yet on an operational level. Apple's got some new wearables coming in 2027. A new anonymously sourced report details an effort inside Apple to make glasses as the company's next big wearable. Apparently, we should picture something like the Apple Watch, a sleek, internally designed new object of consumer envy, which comes in a variety of designs, but with an instantly recognizable profile or icon. This concept is known internally. So there's leaks going on now. The push into wearables will come on the heels of Apple's smart glasses. It'll be powered by the mythical new Siri, which has yet to show up. Sounds like it's meant to be a ubiquitous part of Apple's plans for the next few years. Mark Gurman did some reporting on it this weekend. He's made a name for himself by collecting information from Apple leakers. And he was already claimed that a wearables push from Apple is well on its way. He said that Apple is developing its own version of the Meta-dominated audio-enabled smart glass device, and it's internally codenamed N50. We should expect it to be officially unveiled by the end of this year, apparently, and then released in 2027. Pendant. Again, there's a lot of rumors out there. How do you feel about Apple glasses? There's also in the works, but we don't know if that's true or not, is a pendant sort of like Humane AI pen. That would be a wearable. I don't know how I feel about some of this. I don't know if we need glasses to have a camera on it. 4 possible style types for glasses, including a Wayfarer type, a big round, probably Harry Potter type, more refined oval or circular type, a rectangular, which is like Tim Cook's. Lots of different colors are expected. Intended uses include Siri interactions, music, photo, and video capturing, dealing with phone calls and receiving notifications. I don't know. How do you feel about this? We've been talking a lot about the phone recently. I did one on big second of my podcast on Friday, my strategy show. Talked about the future of glasses. If you're someone who really likes computers and wants a computer on your face all day long, you could probably already picture how an entry in this category would look and benefit you. I can picture apps that gamify chores or a whole new dimension of spoken turn-by-turn directions. Like, see the statue of the guy on the horse? The bike path is just right around the corner from it. Apple has struggled mightily with Siri, taking a new product category consumer skeptical about and releasing a product that in the category ropes people in like en masse. So people underestimate the amount of tech Meta was able to fit into those small glasses. Apple can close the gap, but it's not going to be easy. I question, do consumers really want this? Because they're not really buying the heck out of Apple or out of Meta's glasses. So this is something I've actually, thought about deeply. Doing consumer research in many places around the world while, writing ideas down about, is this a good investment or not? Is this a good trade or not? Will this move the needle or not? Speaking of moving the needle, how are you doing for retirement? Big event coming up this weekend, Saturday, April 18th, 11:30 to 1:30 in Sunnyvale, California. You can sign up for the event at robblackshow.com. It's robblackshow.com. It's Saturday from 11:30 to 1:30. It's a Pints and Portfolio where I'll buy the beer and we'll talk financial planning. What are you doing right? What are you doing wrong? It's totally informal, but very educational with lots of actionable insights for you. It's great for networking. Sign up for it, robblackshow.com. RobBlack.com.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.